This is David Goldman, Asia Times Deputy Editor, speaking to you on the evening of April 22nd from New York City. Well, today was a bad day for the U.S. stock market. Yesterday, former Treasury Secretary Larry Summers warned that red alarm bells were ringing about inflation, and boy, is he ever right. And today, the Biden administration did perhaps the dumbest thing it could do under the circumstances, which is to propose a gigantic increase in the capital gains tax. Now, people buy stocks mainly for capital gains, and raising the capital gains tax roughly twofold to about 43% for the richest investors would be a gigantic disincentive for people to buy stocks and for companies to invest in their businesses. Add to that the proposed increase in the corporate tax rate to 28% from the present 21%, and it looks like the golden goose of the American economy is being prepared for slaughter. Now let's talk for a moment about inflation. The regional Federal Reserve banks conduct surveys of prices paid by businesses, and the input costs of businesses are rising at roughly the fastest rate in history, only equaled by the worst of the bubble period just before the great financial crash of 2008, which is what we look like we're headed to. Now, with some simple calculations and the help of the computer, we found that the prices paid to businesses are a pretty good forecaster of future inflation, and what they forecast is a 4% inflation rate for the United States by midsummer. That's as opposed to a 2.5% inflation rate built into the prices of inflation-protected Treasury securities. Now, that cannot be good. If you have a big rise in bond yields to compensate for that, and a further rise to compensate for the impact of a 12% year-on-year home price increase on the inflation component for shelter in the inflation index, we're looking at 100 to 200 basis point rise in the 10-year Treasury yield, and that will clobber U.S. equity prices. The worst of it, as we keep emphasizing, is that the U.S. is running $1 trillion a year current account deficit, and the main thing it has to sell to foreigners to finance that deficit are U.S. equities. So if you take the one thing in your front window that people want to buy, make it a great deal less attractive as an investment, you get into a self-feeding cycle of rising bond yields, falling stock prices, a falling dollar, and a world of pain indeed for the U.S. economy. It looks like the Biden administration is cooking America's goose, so we really don't have a positive outlook for equities going towards the end of this year. Be afraid, be very afraid. This is David Goldman in New York City.